Hello, everyone. Welcome to today's webinar on the topic Top 10 Tips for a CFO to Launch a Token. My name is Jacob Kobler. I'm the VP at Request Finance and a proud member of the Web3 Finance Club, the host of today's webinar. The Web3 Finance Club already unites over 1,100 finance leaders in the Web3 space. The goal is to share insights, experiences, and innovations. With a 17% acceptance rate and a strong monthly growth rate, the Web3 Finance Club has established itself as the go-to community for finance professionals in the Web3 space. We are thrilled to have you with us here for discussion on a very important topic, how CFOs navigate the tokenomics landscape. And we have today three fantastic speakers who bring a lot of experience on the topic with us. I will start with a short introduction on our speakers, starting with Reinhold Lackner, who is the CFO of Limewire, a groundbreaking Web3 generative AI platform, revolutionizing content creation and ownership. After a 15 million token raise in 2022, Limewire continues to empower artists with an AI-driven platform and allows their creators to own, trade, and monetize their content. Reinhold has an impressive background in finance on Web3, but also Web2, in restructuring, and he has experience with SaaS portfolio management across a lot of different successful companies, including Limewire, ZeroSSL, Eversign, and Invoicely. Next on our speaker list is Fabio Mancini, the co-founder of TokenOps. He's an expert in token operations and lifecycle management. TokenOps supports CFOs and finance professionals in streamlining on-chain management through a suite of tools for tracking, distributing, locking, airdrops, and much more. Fabio brings in a lot of insights from his previous positions in McKinsey, Procter & Gamble, and he's also a Forbes 30 under 30 member. Last but not least, we are very happy to have Vincent today with us, the founder of Chainforce, a leading blockchain and tokenization consulting agency specializing in token economics and engineering. Since 2015, he has been a key figure in the blockchain crypto space, advising several token ventures and actively participating in DAOs. At Chainforce, Vincent helps businesses in DeFi, GameFi, and Web3 to harness the power of token economics, guiding them through token strategy, ecosystem design, and token launches. His experience enables founders and investors to confidently design and launch sustainable ventures. Our goal today is to bring you actionable insights and a roadmap how to launch a token. And we'll have around 45 minutes for the main discussion. And then we have time for Q&A. You can drop your questions on the right side in the comment box or in the Q&A section. There's a separate field for that. And we have support from Simran today, who will then decide which questions will be brought on stage. Let's start with our audience. So the first question to kick things off would be that we directly start into the main topic, our top 10 tips. And therefore, I would like to ask each speaker to share 3 to 4 key tips for CFOs who look to launch a token, what to consider. So what are the most crucial factors you would advise them to prioritize from the start? And I would like to start now with Reinhold, the CFO of Limewire. Reinhold, can you please share your thoughts on that topic?
Yes, thanks, Jacob. Thanks for the invite. And hello to all around the world. So which are the most important things for Limewire, especially, or I think for all crypto companies, the tokenomics is very important because you need to have a clear communication and a fixed content for publication, and there shouldn't be a lot of changes after you have published the tokenomics. It means, for example, at Limewire, we had the the public sale was delayed for 6 months, and this was, our investors were not happy about that. Not only the investors, the whole community was not happy. But for us, was good. Well, it was good because it was a crypto winter, and when we went live in 2023, the crypto situation was a lot better. As a second point, I would say a clear use case for a token. Most of the investors of most of the projects really don't know what they can use for what the token is. For us, from start on, it was clear we have a subscription model, and you can use the token as a payment for our subscription. And this should be really easy to understand, because at most of the projects, you don't understand for the use case for the token, and most of the buyers are not really experienced, and therefore the use case should be really easy to understand. For us, it was also important that in our team we had a few former employees, for example, from Bitpanda, and they had a really good connection into the crypto space, because you need this. We had the private and strategic token sale, and we raised 50 millions, and without good connection to the crypto space, it's nearly not possible to raise 50 million. And for us, it was also very important, the regulatory and compliance. Therefore, we have one company, for example, in Austria and one in Estonia, because the regulatory situation in Estonia got better for a token sale than in Austria. Now I will hand over to Vincent.
Yeah, thanks, Reinhold. Thanks a lot for sharing that insight. And yeah, as Reinhold already mentioned, Vincent, you work together with companies and advise them how to best structure a token go live. Can you share now your best tips, your top 3 to 4 insights for the audience?
Yes, thanks, Jacob. And it's nice to be here with you in this webinar. So with Chainforce, we guide and help founders and business leaders to integrate a token into their business models, whether that is an existing one or something new to launch. And the fundamental step is really like a fundamental aspect of the tokenomics is really having a token model that you can actually integrate in your strategy that's going to be like supportive of achieving your business objectives. So the token is not a goal by itself. It's an instrument that's going to help you achieve certain goals you were otherwise not able to achieve or not have an edge on. So it really starts with ensuring that a token model is really aligned with your overall business goals, and having a very formal, very clear alignment, which is also what I heard Reinhold said, of what the token, what the role of the token is, what it's going to do, where it's going to get its value from, and what are the other core revenue streams or value flows within the business, so that you can actually have a strong foundation for long-term token demand. And how to approach this is that you really need to start looking at your business model and quantify also your expectations on growth and your revenue, so that you can tie that into a token value accrual forecast. And that it's not about predicting the future. It's much more about bringing your business model in line with your token model and quantifying both the demand and the supply side of your business. And this offers two big benefits. It gives you a very data-driven foundation for setting a clear, fair price. And it also is going to help you avoid speculation and overpricing. The second is it's going to help any stakeholders in your ecosystem to also exactly see how the token fits into the bigger picture, and what the clear relationship is to driving that demand and long-term growth. once that is in place, that's like a formal fundament of your business model and your token model. It's really valuable to focus on understanding how this is going to work in a real world situation. So you want to integrate expectations on business growth, revenue growth, user adoption, number of wallets, activities in your model. And simulations are a really useful and powerful tool that can help to showcase how the ecosystem functions, how the value accrues from the business into the token. And by running these simulations, you can actually highlight the flow of that value and demonstrate how that token is going to be able to capture and redistribute some of that value into the ecosystem. And what we know and what we see is that this really helps anybody, any stakeholder, anybody aligned in the project to see exactly how everything is going to work and how the value flows. So on the one hand, you're able to educate your audience about how it's working. And on the other side, you're also showing them the potential, why it would be interesting to engage. And those two aspects give a really clear and transparent foundation to then actually promote or introduce the token to your audience, which then brings us to my third tip, and that is planning your token generation event. So the moment your token is going to be publicly traded in the open market, and specifically on managing risk and also the liquidity so that you can guarantee stability. So TGE is when you really first time publish your token in the market, and you want to assess the environment in which you're doing that. So you want to prepare your liquidity requirements and also any market making strategies in advance. And you can think about it as like a well-planned TGE could actually be also like controlling the flow of a dam. Like you want to ensure that at the right time, you have the right amount of tokens and liquidity available for trading without overwhelming the market. And the way you do that is by really assessing liquidity needs in advance, and also setting up a market making strategy that's going to help you to manage any volatility and provide a stable environment for the token in the early days. And the early days have a different situation. It's a different environment than longer term, when probably your own business model is also more mature and driving more sustainable value flows into the market. And that's why it's so important to work with partners to keep things healthy and also reduce the risk that you have at that TGE moment. Those are my three tips. I want to leave it at that. And then
amazing, Vincent. Thanks a lot for sharing that insights. Very valuable. And Fabio, you built a software that streamlines the whole process of token management. You worked together with a lot of CFOs already in managing this whole process efficiently. So I would be also super interested, what were your learnings and what would you tell a CFO who comes to you and wants to start a token project?
Yeah, so my tip actually touched on what both Reinhold and Vincent mentioned. So it's important to raise, it's important to have a valuable tokenomics, a valuable accrual of your revenues or value to the token itself. But the one crucial piece when you launch a token is actually distributing your tokens effectively towards your stakeholders, right? So you have, especially lately, a lot of airdrops to reward early users. And then, of course, you have team and investor distribution. It is essential to have the right long-term incentive for all the actors to keep being involved and pushing the success of the project. So it's basically vesting, right? It's normal vesting terms are 2 to 4 years. That's the average that we see in the market. But there is a lot of variability in this. There's a lot of research that has been written, not just by us, but by a lot of VCs and researchers in the space. And so you can really observe already a lot of data, a lot of correlation data among what happens when during token vesting processes, especially on price action, because in the end, what we're all interested in, right, is the success of the project from a token price and token market cap perspective. Investing and distribution has a key role in that. So the main learnings are that there is a, basically correlation between the unlocks, the circulating supply, and the price volatility. So the bigger percentage of supply gets unlocked, the higher price volatility there would be in the two weeks before and after the unlock itself. That does not hold true in the case of unlocks that are below 1%. So one of the key tips, observing data from the past, which doesn't necessarily mean that this is going to be true in the future, but if projects are able to avoid unlocking their supply in jumps of like more than 1%, that should help with lower price volatility. Also, many founders are shocked of like how much price volatility they can get at launch in terms of ups and downs in the price that can burn a lot of users, that buy at some local tops and then find themselves with tokens at local lows. So that is to be expected. There is price volatility very early in the vesting cycle, while for mostly vested tokens there is not such a high volatility. So while having vesting is important, it's also important to have vesting that sort of progresses in a way that unlocks the majority of the circulating supply of the token early on in the cycle, so that there is enough liquidity in the market to absorb such price fluctuations. So touching a bit on what Vincent already said in terms of managing liquidity. This I would say like the key tips. Then the way to act on it is you can also ensure that you're adopting new ways of distributing your tokens and your supply rate based on what you see in the market. So there are smart contracts and oracles, and the blockchain and tooling has evolved a lot, especially in the past 2 years. So you can, if you want, you can ensure that your token circulation increases or decreases based on how you see the adoption of your product going in the market, and also how you see the price moving. So you can sort of try to keep your token price in a certain corridor by modulating the supply through vesting. The last tip, as we're chatting about, CFO type of jobs and responsibilities, is of course you need to ensure legal, tax compliance, both for your projects but also for the key members that are involved in the project. So my suggestion is, and we can touch more on that later, but avoid the indie short-term, I can do it myself approach that unfortunately happens a lot in crypto. My intern can do it. I'll try to avoid that and like seek the advice of both like legal, tax, accounting experts in various jurisdictions where your team and investors are based, and really keep yourself early on with the right tools to avoid having to spend money, headaches, and really like potentially events that can destroy the company from a regulatory perspective later on in the company life cycle.
Thanks a lot, Fabio. So that were really amazing tips. And I would like now to dig a bit deeper. And Reinhold, you had a really impressive token raise with Limewire in 2022, over $15 million US. That's an impressive amount. And now we discussed how to prepare for token launch. So we learned already the top tips, but now I would be interested, what were your experiences? So what do you believe is the most challenging part of managing a token post-launch. So after you did a successful go live, what's important to consider after that? And how does your role as a crypto Web3 CFO help to solve that problems, that challenges?
Yeah, okay. So especially for Limewire as a use case, it was very important that the token, or all investors want to make a short-term profit, and all want that the token price is always increasing. But normally it dips, like it was also at Limewire, and especially then you have to the community, you have to activate them and to write a lot at Twitter that people, especially retail, is buying the token, because if it only dips, then nobody wants to buy. And it was also last year when we launched the token, especially in summertime, it really went down. But then it was very important that we listed the token at, I think, more than 20 exchanges. And every time when we announced a new listing, the price went up. Therefore, listing on exchanges are very important. And now, also with Mika, you have to take care on which exchanges you're really listing the token. Because, for example, for us, the US was really hard. For example, if you list the token at Kraken, it was not possible that US people are buying the token at the Kraken exchange, and the US market is the most important one. So you have to really look where US guys can buy the token, because even like on our side, you can also stake our token, but it's not possible for US guys. And I would say more than 70 or 80% even of our strategic investors are US based. So this was not easy to handle, because most are using a VPN and stuff like this, but this is not legal. Therefore, you need a big exchange where especially people from the US can buy the token. But this is not the only topic, because the second topic is, as Fabio already mentioned, the vesting, because after 1 year, the vesting was over and the unlock started, and until then our price only increased. But then the unlock started, and yeah, it's normal that then former employees sold their token. The big strategic investors, they don't sell the token because they want 100x and even more, and not only 10x. But the smaller investors, they sold the token, and therefore this is at the Limewire token. You see, this was not really good, but that's normal. People don't understand why this happens, but this is normal, and it's written in the Tokenomics. And the employees, okay, they get a salary, but I would say nearly 40 or 50% of their compensation is the token. And so especially, it doesn't matter if actual employees or former employees, they will sell the price. They will sell the token for every price, even if it's very low, because for them it's still profitable, and that's really a huge challenge, because the investors, they don't care about these topics, but as a company, it's very important. So this was our biggest challenge, what you could see from outside. But still, for the company, it's not only the token price. We have like our token. We have a company in Estonia. There we had regulatory topics, and for example, we had audits. And as a CFO, especially in Europe, it's not so easy, for example, to find an accountant who can do crypto accounting. That's nearly not possible. A normal accountant, it doesn't matter if it's based in Estonia or Austria, has no knowledge about cryptos. And this is, for example, the crypto accounting in our company, most of the time I need to do, because nobody wants to do this. And if you have an audit, then it's even getting harder, especially if in most countries, if you raise 50 millions, your company needs to be audited. And this is even more tough because to find, for example, an auditor for us in Estonia, it was nearly not possible. If you don't have any good connections, you will not find an auditor, but this is mandatory. Otherwise, you get delisted in Estonia. And it's also hard, if you look at accounting, to really show the auditor all what's going on with your token and how do you do the accounting. So these two topics are very, very, very important for us, especially from my side. And I would say the rest of the things, we have more C-level CEO and also CTO, they are doing this stuff. And one last topic for us, it was very, very important that we are utility token, because in Europe, otherwise you need a license, and at first it's not easy to get this license. And as a startup, we always look that our burn rate is as low as possible. And if you need a license, you need a lot more employees. And we started during the crypto winter, and therefore we already from start on we had a high burn rate, and it's very important to get as soon as possible that you don't have a burn rate anymore, and to get profitable. And yeah, these were the three really most important topics since our launch. And yeah, in the future we will have more challenges, like, okay, now our token is really down, and we need to do a lot of marketing that our token price will go up again. Then we are very happy that we don't need external cash. Otherwise, it's at first tough to get. And the second thing is our valuation would be low. And there are still ongoing challenges, especially in the accounting and with our auditor in Estonia. Yeah.
Reinhold, yeah, it's really amazing to hear all that experience from your side, because what you went through with this successful token sale, but also with the challenges, I think that's really interesting and valuable experience, because not a lot of people, especially in Europe, can say that they managed something like that efficiently. And all the thanks for mentioning how difficult it can be to find an auditor who really verifies your books on the crypto side. And I think this is also where the Web3 Finance Club helps people a lot. You see it on a very constant basis, people asking for advice of like tax advisors, auditors. So also was happy that you mentioned that. And now we looked at the challenges. And Reinhold, thanks again for sharing your experience. But now we want to also look on the more positive side and how to solve challenges. And therefore, Fabio, with TokenOps, you have a really strong focus on financial operations in the tooling Web3 space. And I would like to ask you, what tooling and operating models do you believe are the most effective one for token-based projects? So what should CFOs consider to balance transparency with operational efficiency?
Yeah, I think Reinhold touched on it, right, when he was answering the first question. Transparency and community is a very important topic in Web3. Not only blockchain as a technology itself allows for like radical transparency. Anybody can go like look at this public ledger and see what's going on. But so not only it's possible, but also the core Web3 communities are very aware of this, and they really do care a lot about transparency, auditability, and really like alignment of incentives. So what we and not only that, but there are also a lot of on-chain investigators, like key opinion leaders, that run continuous queries and researches with various tools to uncover unfair behavior that have happened and keep happening in the space. So our suggestion is, of course, to have a proactive transparency approach with investors and communities, especially when it comes, again, I touch on vesting and distribution because this is the core of our expertise. But when people come to us and say, oh, we want to hide this, we don't want people to know what's going on, like, we normally say that this is a recipe for disaster, because the community will find out, information will leak, and that will ruin the reputation of the project for the long term. So, reputation is hard to gain and very easy to lose. So at the macro level, we certainly suggest people to use, as much as possible on-chain, everything that can be as much as possible on-chain and transparently auditable by anyone. So try to avoid like tools that do stuff in a Web2 way, where everything, happens at a custodian level or within a Web2 software that doesn't allow the community to see what's going on. At the same time, we recognize that personal privacy is important. So just to make it very concrete, while it's important that investors and community knows what are the token allocations to the team, to the investors, and to the community, and to the rewards for like using a protocol, for example, it is also important that a key member of the team, a key employee of the team, or like any employee of the team gets their privacy respected in terms of like not wanting people to know how much they're compensated for their job, or like where they live, or where they pay taxes, etc. Like basic right to privacy, right? So also on this, of course, with blockchain's radical transparency, sometimes it can be hard, but there is a lot of tools now that allow to use, like zero knowledge and all the fancy infrastructure that has been built in the last 2-3 years that can actually be used to ensure that these two things are perfectly balanced. Of course, there is there are also like regional nuances. So like Reinhold was saying, like in Europe, in certain countries, you need audits, you need your books audited. In some other offshore jurisdiction, this is not the case. So companies can be a bit more relaxed in the way they manage things. But our suggestion is always to do the right thing. So just think for yourself, I think for your entire community and employees. So FTX saga is, it seems like far away, but it's not. It's just 2 years ago that the entire industry and many companies got really affected, with the entire treasury getting wiped out just because they chose to use FTX for the wrong reasons as a bank, and FTX was not using the right tools to manage and understand what they had in their belly, right? So I just go back to what I said at the beginning. Avoid, the do-it-yourself. My engineer can write a script and do this, but really prepare for the long term, prepare to be compliant, and study, all the jurisdictional landscape where you're involved. Again, I'm not saying anything new. Reinhold, I think, said it with a very hands-on experience. We just see it happening with all our clients, that they try to get prepared for it. And some also come to us with sort of the house is on fire. Can you help us now in a retrospective way? And that makes things much, much harder.
Thanks, Fabio. A short message to the audience also. If you have any question to Fabio, Reinhold, or Vincent, please drop it either in the comments directly, or there's also like a Q&A section, so you can place it there. Thanks again, Fabio. That insights were really great. And now, Vincent, you are advising companies, and you work with a lot of different companies together towards the right tokenomics setup. And as tokenomics continues to evolve, I would like to ask you, what emerging trends or innovations do you foresee in this field? And especially, are there any new mechanisms or models for CFOs that CFOs should consider when designing token incentives to drive a long-term engagement? I'd like to ask you to share your experience in that field.
Yeah, thanks, Jacob. So when we work with our clients, there is definitely a part where we do also a bit of education and create an understanding of what it now actually means to run a tokenized business. And how we summarize it is you're creating market value for all your stakeholders in the public place. And it means that you have in the open market, you have a supply and a demand side. So we're very comfortable often when talking about tokenomics, looking at the token model, the financial model, which really talks a lot about that supply. And that's something we, as a CFO, want to aim to stabilize by having, by releasing it when necessary or applicable. On the right side, we have the focus to grow the demand over time. So it's really about value creation. And there's actually two interesting things you can do to manage both sides. So on the one hand, there's the you can have dynamic token incentive models. So we see a shift from fixed rewards to these more adaptive incentives, where traditionally many tokens rely on static rewards, whether that's staking, for example, and they're fixed, and it gives a lot of guarantees because it's on chain, it's very known. But in the long run, that can typically lead to a misalignment between that value you want to bring into your platform or into your ecosystem for basically the price that it's costing you. So this often leads to inflation, dilution of the token value. So I see a trend where you have these dynamic token incentive models where you adapt rewards based on like real-time on-chain metrics or user metrics such as demand, user engagement, or network activity to keep those incentives relevant and sustainable over time. And it has two, I think, big benefits. Really depends also on the use case, but they do allow for a more dynamic and healthier balance between distribution rewards and preserving token value. And they can really help to avoid excessive token supply and reduce the risk of too high of an inflation that long term, because every year you are running a tokenized business, the situation changes and also becomes much more, the influence you have on it becomes smaller over time. So that's definitely a shift that we see and something I would recommend CFOs to consider. The other one would focus on driving sustainable demand and consider composable token mechanisms. So you can have multi-layered utilities that enable a token to serve like multiple purposes across different platforms and even across different ecosystems. So it's exciting because it allows tokens to have these layered utilities, allow them to operate seamlessly across various DeFi platforms, different governance structures, and even different community incentive programs. And this gives a single token multiple uses, enriching its overall functionality, and thereby giving it more value and drive the demand to it long term. So it's typically a richer experience for users. And it also encourages users to stay within the ecosystem because you now have multiple ways to benefit from holding that token just beyond staking and speculation, for example. And yeah, that allows you to build a more like engaging, loyalty-driven ecosystem that I think down the line helps you reduce any selling pressure and drive up that long-term retention that I think most companies and CFOs specifically should be aiming and investing into.
Perfect. Thanks, Vincent, for sharing that. Considering the time and also considering that we will have a Q&A section in the end, I will now move to our last question already. And for the last question, I would like to ask Fabio, Reinhold, and Vincent. And I would like to ask you to keep that answer a bit shorter. So please try to stay within 1 or 1.5 minutes, because now we want to understand, if I'm now a CFO, maybe also in this audience, and I'm actually planning to launch a token. I'm in the beginning right now. What would you recommend? Are the immediate next steps where to start? So maybe Reinhold, what would you suggest? What is the immediate next step where to start when launching a token?
At first, I would say if you launch a token, you need to have idea, case, very important token. And as a second step, where do you want to launch the token? It's not so easy to launch a token in every country. And the thing is, you will not launch it alone. You need friends or people who will do this with you. And that's very important, co-founders, that the co-founders are working together. It's not so easy if you have, it doesn't matter a Web3 or a normal startup, and you learn to know maybe your co-founder, that everybody has every other interests, and that you are in line with the co-founder, and that all are really working together to achieve the target. Yes, these are the three most important topics.
Amazing. Yeah, finding the right team and the right partner is very essential. I agree with you. Fabio, what are the immediate next step you would recommend me if I ask you, I want to launch a token as a CFO?
Yeah, so one, like I said before, get a full suite of tools that you need: accounting, subledger, Xero, QuickBooks, invoicing, token bet. Get your suite of tools so that can make your life good for the long term. Of course, like Reinhold said, in which jurisdiction you are and from which jurisdiction you're going to launch a token, get a legal opinion to make sure that you're heading on the safe side on anything. Tokenomics, get the tokenomics right. Do you need this token? How does the value accrue to this token? Otherwise, your token will go to zero, because people will understand it has literally zero value. Be mindful of the process of listing a token on exchanges. It is important, like Reinhold said at the beginning, that people can access and buy your token from various places in the world. Yet there is also a lot of volumes on exchanges are going down versus volume on dexes. So make sure you prepare for both processes. And third, and the last one, community. 90% of token launches have gone down 50 to 80% this year because of the lack of community acceptance for those tokens. This is a VC token. I'm just buying the bag of the VC. It's a lot the mantra in crypto communities right now. So make sure that your community rallies behind your project.
Perfect. Thanks, Fabio. And Vincent, what would you recommend me? Do you agree with Reinhold, Fabio? Do you have other suggestions? You have the closing words now.
Yeah, perfect. I definitely agree with some points mentioned by both. I cannot stress enough. Of course, it's my business, but it's also about making sure there will be more sustainable token economies out there. Is that you need to have an assessment done, like a quantitative assessment that's going to show you and validate that your revenue model can actually support and sustain your token model's inflation and inflow of the token. And that you actually take that responsibility as a CFO to audit or assess that you can sustain your token price based on your business model, whether that is an optimistic one or an average case scenario. You don't want to be an order of magnitude off with that, because you will never be able to retain or get back to your listing price, which I think by definition is doing harm to any token holders that have bought in that price, whether that is early stage or later. So I want to leave it at that one point. Have your model assessed before you go to market with it.
Amazing. That were really nice closing words, Vincent. Thanks a lot. Now we come to the last section, or last part of our webinar. We have 14 minutes left, and thanks for sharing all your questions. So I think we collected some really interesting questions. And now we will start. There's a Q&A tool, and I will now pick the most up-ranked question and read it out. And then the person who feels most suitable to answer can take it. So the question now will be displayed here. Question by Anna. When you issue a utility token, should the part of it automatically allocated to investors or the team? Or auto allocation should be done only in relation to security tokens? Question mark. Any one of you who wants to take the question? Otherwise, I will pick someone.
Maybe I can touch on this one.
Thanks, Fabio.
Like you define the allocations in the tokenomics, right? There is not really like a rule. It's more as like, what's the role of your token in for your protocol, for your economy, right? Is it a token that needs to be used for the protocol to function properly? So a lot of it should go into rewards for people using the protocol itself. If that's the case, you allocate more to reserve like protocol usage. Vincent can tell more about this. When it comes to like team and investors, like again, there is no rules, but like normally team gets founding team and also later team gets between 50 to 30%. Then a good chunk is for investors that believed in the project early on. It is also true, like I mentioned in my last tips, that there has been a lot of backlash from communities on like VC tokens because they've been perceived as like unfairly allocated and unfairly sold at unfair prices. So just people don't want to touch them until they feel like they're getting the token at the same price as what the early investors or like the investors in the previous 1 to 2 rounds got them. So I think these are like more or less what you see in the market right now. Then there is no real like general practice.
Amazing, Fabio. Thanks for that answer. Anna, I hope that answer was useful. Let me know if you have another question in the chat. So I will pick the next question, and I now chose this one because I think that's really interesting. Aura is asking, what is the one thing you wish you knew before launching a token and would have made a difference? I think this is a question for Reinhold because, yeah, with the Limewire token, I think you're best to share your experience.
For Limewire, it was very important, or actually, it's not easy to know if you are in a crypto winter or not, you know, because if you launch a token in a bear market, in the crypto winter, it's really hard to be successful because nobody is interested in cryptos and nobody will buy your token. And this is very important that you launch your token on the right time. For example, it's better normally if you launch this like September, October, because normally October, for you not maybe, but for us, for example, our token launch was in May, and this was not a good timing because the whole summer was not good, and we recognized from September on the demand was getting higher. In September, October, November, December was very well, and you see, for us until March, April it was good, and again in May it went down. So the timing is very important. And at first we wanted to launch the token in Q4 2022, and we postponed this. It was not good because our community was not happy, and also the private investors, because they already invested the money. But for us it was good, and if we could choose, then even we would had postponed the timing more. But May it was really late, But a second time, we wouldn't do this. We would launch the token more in September and during this time.
Cool. Thanks a lot, Reinhold, for sharing your insights. There's many more questions now, so thanks about that. And there's one question with 2 upvotes, so it's clear that we will take that question from Joe Clark. And I see already it's a longer one, so let me check if you can. I think it's cut, so I will read out the rest then. I see the whole one. The question from Joe Clark is, can you describe at a high level how in practice you approach the build of tokenomics modeling? Making assumption about the supply side is relatively easy. In that we can control the vesting and unlock terms, but how do you think about modeling and making assumption about the demand side of the market?
Yeah,
Vincent,
I want to take a jab at that. I really like that question already. Yeah. So like at a high level, building a tokenomics model start really by defining your token economy in a vacuum, right? So you outline your ecosystems, fundamental assumptions of the token model, like the vesting, the unlocking schedules, and you can start focusing for the demand side on mapping like real economical value. That's why I think our audience is great for this, because CFOs can think in terms of economical value and like how that relates to the business. You can map your economical value drivers directly to token demand. And you do that by identifying like core utilities and incentives that encourage usage of the token and that retention within the ecosystem that I talked about earlier. And then you take those assumptions for the token model and also do on-chain analysis and benchmarking. So what you want to do is you want to look at comparable projects that have already been in the market that either have the same kind of business model or serve a similar audience. And you want to really look at key metrics that you can use to bring more of a reference frame to your to the demand assumptions. So these can be like key metrics with respect to token holding time or transaction volume, staking ratios, total value locked. And what you can do is use that data in a simulation to stress test these assumptions under different market conditions. And that should help you refine and understand your token model and optimize it for those real world situations.
Perfect. Thanks, Vincent, a lot for that answer. We have some more time. So there's a very cool question I would like to pick next. And Aura is asking, can you name a few tools that are helping you the most in managing everyday's activities? So we know for sure one tool already, TokenOps, but maybe Reinhold, you are the good person to answer that. So what other tools are you using for managing your everyday activities?
Honestly, we don't really use special tools because we are a small company, only have 8 employees, and for finance we have our accounting system. We are checking on a daily basis the exchanges, but we don't use any tool for that. And we are too small really to make our runway to calculate this. It's very easy to do this in Excel. It's for us the best tool because finance, for example, we are only 2, and I don't need to implement any special tool for that because everybody knows Excel and it's easy to use.
Okay, and then maybe asking you, Fabio, you work with companies who leverage your software. What do you see that those companies using next to TokenOps? What do you think are suitable tools that help CFOs when managing token projects?
Yeah, so the stack we see the most and the ones that we also have, for our own company is an accounting tool, like a Web2 accounting tool, Xero, QuickBooks, just to mention like known names. Then you have crypto subledgers that tracks your wallets and track your on-chain transactions. Request as one with Consola, and there is also a bunch of other competitors. I don't know if I'm allowed to mention them.
Sure. Yeah. Web3 Finance Club is neutral place, so you can for sure. Yeah.
Okay. No, there's a bunch. You know, Crypto Worth, Dress, etc. Like they're very well known. The two, of course, need to work in combination. They need to ensure that there is like the right connectivity. And for us, it was also very instrumental to have an accounting firm. For us, it's Addison Trotter, that makes sure that these tools work well together and they can give to the accountants, you know, the information that they need in order to close our books and to do our reporting. And then on the side of that, for the whole, you know, payment stack, like what we see is basically on-chain payroll. Request Finance, I think, is by far the market lead and also the oldest product in the market, but there are also other stuff emerging there. There are then, you know, crypto to fiat sort of payment stack, Request being one of them, but then there's a bunch also out there. I, for example, personally prefer to keep the things separate. So just also have a bank account and, you know, rather have the two things separated. But we do see an increase in companies that do most of their operations fully on chain. Why? Because unlike 2-3 years ago, now there is actually, you know, the platforms that allow you to do things end to end and to have everything reconciled into a single view. And then, of course, like Reinhold said, Excel is always king. It's just how do the data get to Excel. That's the part where you need all this like tooling stack so that you can actually have a reliable number on the Excel cells.
Thanks, Fabio. And I think that also closes our discussion today. Fabio, Reinhold, Vincent, it was a real big pleasure. And also big thanks to the really large audience today. Thanks for dropping your question. We will upload this video for sure, as always, to the webinar section for the Web3 Finance Club. Big thanks to all people who joined today. And I hope to see you very soon in the Slack community discussing about everything, also what was mentioned today. And also I want to highlight here that there will be a Web3 Finance Club event during the DEF CON in Bangkok. So if you are there, please register, don't miss it. Apart from that, really thanks to our speakers today. I think it was a great session. Thanks everyone who joined, and we continue our discussion in the Web3 Finance Club Slack community. Thanks and see you soon.
Thank you.
Thank you.
Bye.